wherever you are in the world. Good afternoon, everybody. How's everybody doing? Sorry, I've got my camera angled a bit wrong there. That's a bit better. How's everybody doing? Wherever you are in the world. Oh, gosh. Good afternoon, everybody. How's everybody doing? Sorry, I've got my camera angled a bit wrong there. That's a bit better. Right, so who have we got in today? So a few of you in with me. Few of you in and around, great stuff. Right, so I mean, what's been the plan out there? The markets obviously continue to ease to the upside, not so much of a tear that we had previously. We obviously took a short on gold on Monday, which worked out really well. Now, I do expect a bit of a bounce coming in from gold again at some point, but the question is it yet? And I don't think it is. We got to be a little bit careful with gold, but I think it would be great to get a gold long at some point. There are still some concerns out there, even though we've seen the move to the upside be pretty elevated. And I'm still looking to add to positions. I've got a trade in the FTSE, and I'm still looking to add to some positions in the FTSE. Now, if we look at the volume down here, we were talking about volume in the show the other day. Was it with you, Sui, actually, or was it Fad? Somebody was talking about volume. I can't remember exactly who it was, but we've got a move down here. Now we can see a pickup in volume here. So if you look at this volume chart here, it was Fad. Yeah, thanks, Sui. Okay. Well, let's have a look. No, let me just bring my pen in here. So if we see what was going on, and we can really analyze the volume chart here. And you can see really on the daily, and just so everybody can kind of maybe extend their knowledge of a different indicator, then volume is quite a useful one if you use it alongside other things. So let's just have a look how we could use volume and how we would read it. What we'd want to do is pick out a level first. So there's no guarantee. Oh, this is on the wrong screen. 1 second. My pen is on the wrong screen here, which is going to be no good for us. So I think it's 2. Yes, it is. Here we go. This is what we need. There, and there. And okay, there we go. Right then, so if we think about our the position with the FTSE for an example, and we look along the line here. Now you can see that I've shown some areas of support and resistance. This one's quite a good one. Now it's always a bit of a question of exactly where the horizontal level is, but let's assume it's around about here. We've got a support light level there. It comes back and it bounces away. It bounces away again and it bounces away again. It breaks through, but it comes back and it shows some support here. There it breaks through and it shows resistance here. And then we start to come back again and breaks through there. But there's some pretty good resistance there as well. And I'll be looking for this line to potentially be tested. So let's have a look at this lower level as well. Now this lower level is probably not an absolute horizontal level. That's probably the horizontal level back there, and you can see that the price didn't quite touch it. But this level here is more to do with the trend line, which is going along here, probably there actually. So you can see that there's a pattern level here, and if we bring the level up here, then you can see that the pattern just about kind of like creeps in there. So the FTSE 100 was just following this pattern. There's not so many touches on the upper level, but you can see them down here on the lower level. There's a touch here, and I'll come to the significance of volume in a moment. There's a touch here. There's a touch here, there's a touch here. And of course, we break through, but we get sticky, and then we get this this really nice hammer and then what looks like almost an engulfing bar, and this price action here kind of like taken in total. Really, we're kind of looking at the whole area of price action, and all the price action accumulated together really kind of drives the market back to the upside. So so there's lots to see in these particular positions. Now let's have a look at the volume. So if we kind of like get a line that's coming down here, let me just draw a proper line. Let's draw a decent, in actual fact, let's do this. Let's get rid of that. And we will draw a line like this. Just so we have it. And that's a kind of area there. Now let's have a look at what happened with the volume in these areas. And you can see that really, you know, up until here, the volume's really kind of trending down. And then we start to get a bit of a pickup and in fact, let me draw all these ones first. There's a little trend line there. And there's another one there. Let me get this one. Somewhere along there. It's not the best line at the end there. Let's get rid of these two. Do that one more time. Looks like it's around about there. So if we start marking these off, then you can see that the correlation between the price action coming down to these zones, you know, price action comes down to this zone just as the volume starts to pick up. So the volume picks up and then you get a spike on what looks like a buying bar. Now that's a really good signal because it suggests that there are bigger players. Now we don't know whether they're institutional players. Hey, Fad, how you doing, buddy? I'm just going through this volume profile just in a bit more detail, not profile, the volume analysis in a bit more detail because of what you mentioned the other day, and just saying that you know we've got these levels of support along here. I don't know when you got in the room, but we got these levels of support here from the pattern. You know, there's a level of support here from the pattern. There's a bounce there from the pattern, and there's a break, and then a breakthrough, but then a really good bar there and a really good bar there. But what we see is volume spikes as the price comes down to this lower line. Now, if we are buyers, what we want to see is other buyers coming in, and there's a volume spike here. This bar is the signal, and that bar becomes the signal because of the volume. This bar here is another signal, and that bar is again because of the volume. Look at the high volume in this lower area here, and then as price starts to move to the upside, you can see the volume just starts to drift down again. And as the price is sort of messing around in this area, the volume is drifting down, but then all of a sudden we get a big spike in volume here as the price approaches this area. Now, initially, it would look like the volume is going to continue to drive the price down, but then we get signals here. These three signal bars here, still on really high volume, telling us that this is a contested area, and really that's what we're looking for. Is the area a genuine contested area, or is it just a potential area that could get broken through, like this one was, for example? You know, if we looked at that bar, we can see that the volume is still kind of decreasing. Yeah, there's a pickup here, so it looks a bit better. But this is where the volume really changes. You know, in this kind of area, we see some really big contracts being purchased and exchanged at this particular point. So it did suggest that we would get a pickup at that particular area. So when looking at volume, then what we want to be doing is firstly drawing our area. And let's just have a look at another example. Let's look at it doesn't really matter. We look at the Kiwi. Let's see what the Kiwi suggests. Now look at there's a pickup in volume here. So while we get, in actual fact, what we want to do first is pick up a price pattern. So let's see if that area looked like it was going to hold in the first place. Now, if we draw some patterns here, and I'm just going to draw some upper trend lines and lower trend lines as well, and see what it's suggesting. Now, we want to see if there's so that area there That's pretty good, actually. Look at this area here. There's a bit of a drift to the downside from the top line there with the volume. The volume starts to really kind of come down as we're kind of caught in the channel. Now there's a pickup in volume here, not markedly, and you probably would say that on average this is fairly low and not very significant. But you can't really take this area into account because this is really the COVID scenario. So there's going to be a pickup in volume there. But really, we start to see pickup, and the way that I've got it is that the green bars show us when volume is going higher, and the red bars show when it's going lower. But there's a pickup in the trend of volume here. The volume starts to really pick up. The trend starts to pick up. Then it picks up again, and it starts to move to the upside after moving fairly solidly to the downside. And you can see again here, this area here is where we start to get our pickup. And then again here, let's draw it from the bottom and see what area that was. And look at the bars that we're getting in that area, suggesting that there could be a hold along this horizontal level at that particular point, and we would have been right on it. Now you will certainly see that volume will work better on some things and not others. Okay, yeah, let's do that. Let's show that, Roy. So if you want to put volume on your chart, if you go to Insert, Indicators, and then come down to Volumes, and then just pick the top one, Volumes. So you go Insert, pick the Insert tab, and pick Indicators. And then you're going to go to Volume, and then pick the volume. Now there are much more advanced volume indicators. You know, something that Orlando uses is even more advanced than this stuff. So this is just simple volume, and it's only volume that is relative to this particular broker. Just telling you what the broker's feed is, but most brokers will be the same. You know, so most of the stuff that we get, that's happened online is relatively similar to what's happening in the overall market. Now again, look at this volume spike here. Big volume spike, and actually this is quite regular, where you'll see a doji with high volume, meaning that this is a very contested area. So now the question here is, if you were to see a doji like this, let me put this to you guys, what do you think the most sensible direction of the market is here? What would you do on a bar like this? Let's see if we can think kind of, if we think about this as a science and an art, what would we do on a bar like this when we get volume, which is popping up? So I've got one answer of bull. It's a bull bar. So you're a buyer straight after the bar. Is that what you're saying there, Fad? Okay, cool. So Fad's a buyer straight off the bar. Anybody else want to plump in anything? Any ideas, Roy? What would you like to do if you saw a bar like that on high volume? No other ideas? Okay, Fad. Appreciate the indecisiveness leading to bullish. Okay, so let me tell you the best way to trade this. The most sensible way to trade it, now whether this is correct or not, the most sensible way to trade it is we have to look at what's the chart telling us at this particular point, because our eyes will tell us whatever we want to see after it's happened. If we forgot all of this stuff that happened here, so omit all that, what is the chart telling us at this particular point? And what I see is a high up here, and there's a low and a lower high. Now we could start arguing that this is a higher high here, and this is a higher low. Certainly, you know, I would grant that. So you could say that the trend shifted here, meaning that this is you know, more likely to go up. Now, I would absolutely agree with that. However, what would be the safest way to play something like this is that you would anticipate after something like this happens that there would be some movement in the market. So at this point, what we can do, rather than taking a punt, if you like, what we can do is put an order in long above the bar and an order in short below the bar. These are the sort of bars when they break, they go, you know, because it's on high volume. So what we'd be looking for is, so if we so it's kind of those one cancel other things, and it'd be interesting to know why this particular bar formed this volume. And that's the other thing that we'd want to do. We'd want to dig a bit deeper and see what it was about this particular date that suggested that. Now that was on the 4th of November. Now we may not find anything, but let's just do a cursory look on Forex Factory. What happened on the 4th of November? Let's start at the 1st. Just in case there's something a bit further back. Now look at this. We got an RBA statement on the 3rd. And big numbers from New Zealand. We're looking at the Kiwi dollar here. Big numbers late from New Zealand. Employment change quarter on quarter negative. Unemployment rate around about the same, but the previous was so actually a bit of a drop in the unemployment numbers. But the ISM happens at 3 p.m. on the 4th from the States. So let's see whether it was ISM or whether it was these or whether it was a combination of the two. Okay, so we're starting to form a picture now. We've seen that doji bar. There's indecision in the market on high volume. There's a battle on high volume. Now, the cash rate was lowered in Australia. The RBA statement was released there. Governor Lowe was also speaking. Then we get the presidential election. There's another thing that is huge for the day. So obviously we're going to get high volume on something like that. And Congress and the unemployment change and the unemployment change there. So there was a lot on the day before that happened. So traders were really coming back in to take some positions. Then we get this ISM number, and the ISM number actually was a little bit negative in comparison, showing that growth is potentially slowing in the States. Now, what we're looking at here is a Kiwi dollar trade, a Kiwi dollar chart. So the Kiwi, the dollar. Now we can now sort of like maybe do a little bit more research. The dollar is also part of this play. Now this all happened on the 4th. So let's have a look at the dollar on the 4th. Generally speaking, was there a pickup in volume? Now here's another doji here. This is the dollar Swissy, and again a pickup in volume. You can see it here. So we could again another doji there and a pickup in volume. So this is telling us that there's an event. There's something you know quite large going on in the market. So we've seen the dollar Swiss and the dollar yen. So now we're starting to get the picture. Maybe it's not about the Aussie. Let's check the Aussie Kiwi and see if there was another one on the 4th. Yeah, there was actually on the. There's more volume here. So the Kiwi looks like it's in play. Let's have a look at a Euro Kiwi. So there was a spike in volume right across the board. And again, look at this. Another doji bar. Now this one's really interesting because this one is on support, this doji bar. Now, if you had plumped for a side here, you may well have been wrong. But if you put an order here and an order here because of the high volume, you can't be wrong. I mean, so far, that particular strategy after the US election and high volume the day after with the doji would have worked out for every single one of these charts. So this is an event-driven approach, if you like. So and what you're waiting for is a contentious bar on high volume, and then just putting orders on either side of it. Let's just double check the Kiwi for another one of these on the pound Kiwi. Here's another one here, not a doji bar, so that one's a bit more decisive. Sell off in the pound Kiwi. Kiwi CAD. Another doji bar. Order at the high. Order at the low. One cancels other, and that one's also kind of gone. Well, looks like near a 3-to-1 as well. So, so the Kiwi was a potential, but so was the dollar off the back of that news. Now we can see whether the driver was the ISM. Now the way we're going to see whether the driver, in the end, the catalyst after the event was the ISM. Did the traders wait for ISM, or were they on the move before ISM? We'll go back to the Kiwi dollar here, and we're looking on the 4th here. This is the day we've got, and ISM would have been released 5 o'clock MT4 time on the 4th. Which is this day here. Now the 4th. Let's see if ISM. There you go. So really, the breakout did happen after ISM. The break to the upside was starting to happen on ISM. Now I think you probably need to get above that high anyway, you know, for the trigger. But we can start to kind of gather the the information if we start to zone in. So if we saw the bar on the 4th, now we want to trade on the 5th really. So there's the bar on the 4th. Now the very next day after that bar is formed, we want to start thinking about direction. Now we know that the high is here, and we know that the low is here. So the first point of call is that large volume bar. And we'll in actual fact, yeah, that's fine actually. No, that's fine. Let's just do it on price points. And the 5th starts here. So things started to calm down after the 5th, but it did start to break to the upside, and then we get a retest. You know, so it's suggesting after that big event, the volume indicator is on the hourly. Sorry, on the daily. That what we just analyze is on the daily. But you can use it on anything really, Sanjay. I mean, it's, you know, it depends on what we're talking about here is an event that happens on a specific day. But you could take the volume indicator. Sorry, the indication of volume coming in, and see how traders react to a specific market news point. Now I'll come to that in one moment, just after we finish this point here. But look how the setup would have allowed us to get in just above here. So rather than even putting an order at the bottom and order at the top, so there's two ways you can do it. You can either play it on a daily chart and put an order at the top and an order on the bottom, or we can start looking the next day and seeing which way is price action going, because we know that it's more likely now to create a trend because we've got to pick up in volume, because we know that there is interest in the market. Now it's really important for us to get liquidity or volatility. And the great thing about looking at a doji bar is that it tells us that the market has volatility. It tells us that there's people on the buy side and there's people on the sell side, and they really are locked. And when when the pressure somehow releases to one side or the other, then it will likely create a decent trend. So volatility can be, you know, so we can see the volatility also on the volume chart, but we'll be looking the next day to kind of get a reaction off the back of it. And then we can see that that, you know, where price comes in just on its own, that we get a break and a retest of this area, and then you know, everything's off to the races, and we could trade it. But the good thing about this is that there's lots in its favor after we've done the first point of call, after we've had that event. So you could start looking at events and saying, right, can I trade around that event? Is there going to be a pickup in volume around that event? What's the bar on the day of the event? How does it look? And then the following day, you can start to see if there's a trade. Ash, what do you make of the hammer bar before the bull? The hammer bar before the bull bar. Is this on the hourly? You're talking about, in this area here? Or are you talking back on the daily? Towards the end. On the H1. So on this chart, forward this way. Talking about this one here. This engulfing bar. Right. Oh, this one here. Nope. Okay. Sorry, buddy. Right at the end. So even further. Okay. Talking right over here, or are you talking here? In fact, let me do this. Let's have a look here. 8 bars back or 8 bars forward? 8 bars back from here. Hold on, let me see what we got here. So if I'm from this bar, 1, 2, 3, 4, 5, 6, 7, 8. This one here. Oh, back from the end. 1, 2, 3, 4, 5, 6, 7, 8. This one here. Okay, great. Right. Well, so the first thing with it is that we need to define what is a hammer. So what's the definition of a hammer? Because the hammer hammers out a low. That's what its role is. It gets its name from hammering out the low end of a range. Now this is not the low end of the range. This is the low. This is the low. There's a low here. This one doesn't even qualify as a hammer because it doesn't hammer out a low. It doesn't go beyond the low, the lowest point. This is not a hammer. You could argue that's a hammer, maybe. If you're saying that this is the pullback, we could argue possibly that's a hammer. But we have to be very careful. This one just about qualifies as a hammer, but this one isn't. That isn't. It's not a hammer. So is this a buying indication when we kind of like look at the situation up here? And it's not really. I mean, let's put in the volume on that one anyway and see what that suggests. Yeah, that is on low volume. What we're looking for, no problem, mate. What we're looking for is volume to pick up in these areas, the low end here, or this point here would be a great point because this is the lower end of the trend. So if you've got a low, if you've got an area that you want to pick up a market, and you don't know if it's going to be here, but you'd certainly be considering this area along here because of the horizontal level. So we'd have to go back and find out what whether this area would spark our interest. We'd have to go back and see if this line sparks our interest, but there is a pickup in volume there. So we're looking for the pickup in volume on areas of support and resistance, and then seeing if there's a trade on. This would be a good example here. Is there a relative pickup in volume here? Well, yes, there is, because the volume. What's happened is, and what we want to see, is that as the market comes down, volume just starts really probably from here, just starts to die off. Then there's a bit of a pickup here, but then it just dies off again here. But then it starts to really pick up. You know, you can see that sort of like volume picks up, and then when the trade is moving, then you know, volumes start to dying off. So if you've got a trend, if you're in a trend and you see decreasing volume in on your trend to the upside, that's a good thing. And it's only really if you start to see volume like it does, well, like it happens here, that you need to start going, am I at a high? You know, can this continue to go, because there's a pickup in volume. So people are now interested, and that's again where we go back and say, what's the driver here? You know, is the driver bullish or bearish? So yeah, that's just a bit of a heads up of how you can start looking at volume in a different way, just to see who's in the market. We might continue this conversation in the US session, but we better get out of here now, because otherwise everybody's we're already over, and Mai will get in trouble for not getting out in time. So I am going to I'm going to finish up, and then we'll maybe come back to some more of this now. Thanks for everybody for attending. If you like it, please click the like on the like button for us, just so we can go up the list in YouTube. And for everyone else, stick around. I'm going to play a tune, and then we'll get to the markets in a bit more detail.